Okay, this is our weekly update for these 13 stocks down, anywhere from 30 to 60, 70% down from their all time highs. Most of them will probably, well, some of them will certainly come back. They're all really real businesses. We'll start with SPX just to get a sense, S&P 500, because that's going to kind of drive the bus. It does look like we got, a daily cycle low. This is a pretty powerful swing low here. We'll see if we get continuation on Monday to continue the daily cycle advance. But it does seem like we have a daily cycle low. But it's only week 11 of the weekly cycle. And these are usually, 25 to 30 weeks. And so we probably have a lot more downside to come. But we're set to bounce short term. And that's the kind of general theme. And if we go to QQQ to get a different kind of flavor, because that's more growth, same kind of idea. Looks like you have that swing low, pretty powerful. Almost went almost went green on the week, but still red. And that's important. Notice that S&P 500 and QQQ closed red still for the week. Although they had this nice powerful reversal, you know, pretty a good reversal day on Thursday and then follow through on Friday. So now we'll jump into the names and we'll always review them in this order. I'll take a little more time on some today, and so you can always, we'll always go through them in this order, so you can fast forward if you want to go through, one particular name versus the other. And so we'll start with service now. Same pattern as a regular market, of course. This one, by contrast, actually closed green, right? And that's important, right? So that's a relative strength. And I would say SMH did show relative strength in general. So that was semis, like just like loosely related, software names. I think in general, like high beta plays, maybe get more of a bounce before the next leg down. Workday, same kind of pattern, still closed green, red. So kind of following the same kind of trajectory as the Nasdaq. Important to note, this one has a swing high for the yearly on the yearly, still well below that. And I guess for service now, yeah, that one isn't quite as far below its yearly swing high, but still pretty much flirting with that. Amazon. So here I'll spend a little more time on this one. Again, same pattern on a daily. You have the swing low, and this one went. Amazon actually went green on the weekly, right? And so Amazon, just like the Nasdaq, topped out on week 3. This is week 9. Notice we've swept all these lows here, right? And we've come all the way down. And it would seem like we really have a sort of destiny with 1650, which is just kind of this broad area, actually. Because you think about it, Price kind of spent this really long time, right? A really long time just kind of in this general area, right? And so it wouldn't be crazy that we come down and test the lower end of that box, maybe even further down, which would be here. That's your December 2018 crazy low at 1363. With the 1650 area, totally doable. And you look at the monthly chart, again, same kind of idea, and that wouldn't even be that crazy, right? You think about this, we have a rounding top here, we come down, kiss this, and then we kind of boomerang out of that. But ultimately, the level doesn't matter as much as what you want to see happen at that moment, like this. This is an example. I'll zoom in. Right. This is your quintessential example. This is your March 2020 sort of bottom. You had your swing low on the monthly level above 2000, right? 2005. And you just kept running. You consolidated the next month, and then you had 3 months of just massive upside. But then you ran into this huge bearish September 2020 month. Then you consolidated, and then from there, all of that has been basically a consolidation inside that September 2020 month range until this recent sort of like, or relatively recent November, when the NASDAQ itself kind of spilled over kind of situation where it just really went lower. So, if you want to start dollar cost averaging in now on Amazon, I couldn't blame you, but like at the same time, you'd still, I guess, how much downside is that from here? Let's see. Even from that low, that is okay. So even if you caught the low of that wick, that would be another 20% down. So that's not the end of the world, especially if you consider, from that peak. And the thing that to remember for Amazon is it actually peaked in July, and so that's actually really important, right? So it actually peaked in July 2021, right, at 37.73, and then in November it got to 37.62, so kind of missed it by like $10 basically. So massive double top as they call it. That next month it was red, but didn't actually make a new low. Like notice that, right? This is important. These are important details, right? Didn't actually make a new low, but it was red. Opened here, closed here. Next month, oof, big downside. But you got a wick. People got excited. Got a little bit of follow through for the next 2 months. You could have made money in here, right? As long as you had your stops in the right place, you were taking profit. And then you got just flushed April, and now followed through in May. And so I suspect we're going to get a bounce here like the broader markets, right? This is just we get a rally here, and then so this candle fills up a little bit. So let's see where this opened. We opened at 24.48. Yeah, it wouldn't be crazy to get back to 24.48. Not even, maybe even we get to 25. What was the high on this candle? 25, 24. Maybe we even get to 2600. I see 2688 as really the level that, so you can imagine, something like, right, like we do something like that, and then that, and then we sort of continue lower from there, sort of thing. Okay, so that's Amazon. Intuitive Surgical. So again, same situation as the broader market with that daily swing low. This one managed to get red to green. I mean, God, wow, Jesus, look at this like downward move. We sliced through the previous cycle low, even without counting it, right? I don't have a count on this, but I know this is obviously a cycle low and a huge rally from there. You can kind of eyeball it when then you have this, this turned out to be a bear flag. It's has spilled over. Now it's going to need to move higher. So this would be maximum upside. I wouldn't expect to get back up there. That would be 310. Yeah, I'd be shocked if we get back up there. So maybe 256, right? So we get back up to 256, and then we make a move lower. And that is your weekly chart. And if you look at the monthly, I think we'll see a similar kind of situation, right? You can see downsides of 154 pretty easily. Again, we're keeping in mind broader market probably not bottoming until summer, maybe late like July, August, even for like the QQQ. Intuit. I think I saw something on CNBC about taking an options play for it, which makes sense. I think they may have earnings coming up. Nice swing low. This does leave a gap, which is important to note. Gaps do get filled generally, so we'll have to see if that gets filled. That's from Okay, so that's like a $4 gap, 362 to 366. That'll be interesting to watch. If you're a gap hunter. So this didn't manage to close green again. Same kind of pattern here. You see this crazy washout. Like pay attention to like this is important detail. We had this leg down, and then this kind of like reluctant rally here, right? Then this like really ugly. This is a weekly chart here. Notice weekly chart. Like look at this horrible shooter. This is what foretold you. Like this was your cue that it was incredibly bearish, and then it just got really big follow through. Now the crazy thing is, again, I talk about this. It's important to understand. At some point, this candle was bright green, right? Because it had made a higher high. I'll zoom in to make sure we're looking closely, right? This we had made a higher high, and it looked like in real time this looked pretty positive. This was green because it opened here, and it went all the way up here, so it was green at one point, really bright green, looked positive, and then it came all the way down, closed on the lows, then got bearish, followed through the next week, and then we had another week, another case where. So think about that. That's important to understand. These are like smaller time, like lower time frame rallies that get stamped out. That's why you have the larger, like the high, like the upper wick. That's important detail to understand as you're in the moment, in the trade, depending on your time frame, obviously. But that works for every time frame, so you can scale that up or down. That works on the 5 minute chart or the hourly chart, or the weekly or the yearly. Doesn't matter. So dominoes, again, all the same pattern. This one actually did manage to go sort of green on the weekly, and the monthly actually looks like it's about to possibly go green. That's interesting. Again, I say in general, there's no reason to kind of step in front of this. I mean, wow, look at Domino's Pizza on that yearly chart. My God. So going back to 2009, is that all green years? Man, that's actually really important to kind of see. Wow. So we're setting up for the first red year in since 2009. Wow. I mean, it would seem like we're heading here, is my sense, which is 276. We're at 340 here. That's a lot of distance there. I would not want to be long here. But, just looking at the structure of this chart, based on sort of where we are, this is your previous cycle low, right? We've come up. Now we're coming down here. I expect we get a bounce. Maybe we get back up to 431. That would be a stretch, actually. I mean, who knows? Like you have to be prepared for every scenario. But maybe 400, 409. But we'll see. Anything could happen. Starbucks. Ooh, same kind of idea here. This one I had been tracking in terms of the cycles on the yearly. So if we look at the date range here, so that was, yeah, that's your top on 16. This is 26. So this is the 20. So very similar count to the S&P in terms of the yearly cycle. Definitely looks like it might be putting in a bottom here, actually. It's entirely possible that Starbucks bottoms before the S&P, of course. And so at 75.60, making a new low on the monthly. It looks like a pretty ugly candle right now. I mean, look at this, the indecision here. We were all the way up here, then we were all the way down here. Now we're just like here, right in the middle. This is month 26. Let's zoom in on the weekly. That's important. Wow. Right. So it looked like, right, we had a ICL on week 20. We came up here. We closed above the 20. Well, barely closed above the 10 period. That was week. That was the second week. So it looks like it was a failure. Now we're getting, yeah. I wouldn't be inclined to think this is just a bearish cycle, right? This is week 8. And if it's not week 8, this is just this could be a really stretched, that would be week 28, I guess, right? Yeah. That's interesting. Could be. Yeah, it could be that this bottoms. That's interesting, right? And so this is the important kind of sort of idea is that you have to be open to changing the way the count works if new evidence comes in, right? Because ultimately, this is the kind of thing where you know for sure in hindsight, and what you're trying to do is increase your probability of understanding it in real time to make it real, like practical for trading. So that's interesting. So I mean, and the next step would be to watch the sort of price action here, but this could be right something like there's no reason why it couldn't have a some kind of catalyst or something where it bottomed before the S&P or broader, and it could still be bearish. I mean, getting back to the 10-day is 82, so even that gives you like a good 5 or 6 points rally. Okay, that's interesting. Very interesting. And again, daily swing low, but like a lot of things actually, it did gap up. So I'd say a move below 71.60, could foretell even more selling below that. Adobe, pretty powerful sort of company, uh, pretty household name in some sense. Pretty powerful weekly candle, very green, very big. We opened here. We actually had a dip all the way down there. I'll zoom in. And then closed all the way up there. That's pretty nice. And high gets you back to basically almost 700. Wow. So that's like 75% upside, basically. I guess is the way to think about that. It's interesting, right? Like that kind of risk reward is very compelling, right? And the monthly is just now going green, right? Like hmm, I'm thinking about taking a long here actually. Right? Like I would, yeah, I'm gonna take a closer look where you might place a stop, but definitely good risk reward here. Salesforce, so almost went green on the weekly. Oh, still a big yearly swing high. And Adobe, the recovery of the swing high would be 433, right? And so that's a important concept of like front running things, right? Like, is it possible that the lower time frame is showing you bullishness enough that you can anticipate it may get through, right? Get back above this swing high, for instance. So that's going to be interesting. Autodesk was looking particularly weak. That's a particularly strong reversal. Wow. I mean, we'll have to see some of those strong reversals happen in the weakest of markets. But wow, that's a powerful looking weekly candle there. Um, so I would be surprised to see us get past 224, but we'll have to see. The monthly candle is going green. That's very important to note. So that's one of the things you want to kind of look for, right? The SPX, I'll just flash to that really quickly. Monthly candle is not green, right? It's anything but green. Oh, sorry, I'll get you right. Like that's very red. QQQ, same thing. So anything that has a green candle on the monthly is actually massively outperforming in terms of relative strength. So that's very important to note. Very, very important to note. Vive, that's not necessarily doing that, right? But it does have the swing low condition, same thing. And it is actually green on the week, just barely, but and the indices aren't. Facebook just below 200. Wow, this whole thing looks like a structure that's about to break down, in my opinion. Wow, and the monthly. So this to me is actually like almost a classic case study. This is like a pretty clear, and obviously it's again it's all probabilities, but the probability seems very slanted, like above 50-50, right? That this is a bear flag, right? Right now, this is just an inside month, right? Inside this big bearish month that went really low and then came up. We'll zoom in, right? We went really low and we came all the way back. You know, that's your lower wick. Now we in May have consolidated in here. We were all the way up here, but we've come down. We were also all the way down here, down at the 185 area. Now we're here hovering right below 200. I suspect this whole consolidation resolves lower to like call it the 139, 140 area, right? Maybe even down into the 125 sort of zone easily. I'm just thinking through the structure of the chart, and you'll notice that's a similar sort of pattern. Like, look, this just looks like a bear flag that is just saying, okay, maybe we get a little bit of a bounce, maybe even up here, and then down, and then maybe even something like that, right? Totally not out of the picture. And if we and the idea that we even get all the way up here, that's maybe it's like something like that, right? Like who knows? But this definitely seems to be pointing lower in terms of probabilities, right? Um, this, yeah. If you look at the daily and you think about the fact that this is all happening, right? In the context, like this is just all you know a big sort of consolidation box off of this gap down, right? Like think about that. We approached the top of that box. We approached the top of the box. We came down. Kind of tried to approach the top of the box again, but couldn't. What is that? That is a lower high. That's what that is, right? Like after this really bearish, like look at this really bearish approach. That's what we got on the daily level when we approach the top. And like the point is, we consolidated in this area, and when we got to the top of the range, it didn't work out. And now we're making lower highs. Not a good sign. Yeah, right. So like the 140 area seems interesting, and a lot of people on Twitter are thinking about this as like prime value. Wow, AMD interesting. This sort of advance looks pretty nice, but also looks like it has some of the very similar characteristics. But big difference. This is actually green on the monthly. Again, that's a big divergence. So the big watch out here is 71 is the area you're kind of on the lookout for on the downside. But I'd say this is definitely showing relative strength. Now, that said, when I say things are showing relative strength, I still would not be long here. There's no reason to be long when the center of gravity is pulling everything lower. It's just not, there's just no reason to put that kind of risk out there. And so I would still remain cautious, but good to know the things that are probably going to recover most smashingly when things really do bottom. And that's why you want to pay attention to things now that are sort of outperforming, that are showing relative strength. So AMD, I would put in that category. That still hasn't made a new low on the yearly. Again, that would actually be the 71 level that you want to watch out for. And maybe it doesn't get there, right? And let's see, has SMH made a new low on the yearly? Just to be, yep. Oh, yeah. Bases, no, it hasn't. It hasn't. Very close, very close. Right, that's on week 8, right? And so that's the wrap.